Dow closes 525 points lower and S&P 500 stares down. First correction says March as stock market hits session low. If you've been following this channel, you know that I had been talking about that the market was going to sell off. We were previously holding onto that 27.5 level that I spoke about, that we had basically been bouncing across for the past couple of weeks. And finally, the market broke through. And I said in my video that the market was going to, as always, it was going to test that new floor, right? So we broke through the floor. That floor becomes now our ceiling. And we saw on 2 consecutive days, the market tried to rally. And then, of course, subsequently today, we see a nice sell-off in the market. Looking, of course, for those who are M1 portfolio, or if you're a long-term investor, this is basically what many of us have been looking for, another opportunity to, of course, buy your favorite stocks on the low. My M1 portfolio is designed for dividends, and of course I've been looking for cheaper stock because I missed quite a bit of the rally. And as you can see, we're down not too bad on the portfolio. Most of that is coming from stocks like CCL that I've been holding and some Foot Locker, but of course quite a few of the gains that I have made came from the risk portion of my portfolio. And I've been waiting for a pullback because most of the stock was overvalued. And so now we're having buying opportunities come in. And of course, like I said last time, the market looks like it's going to test that 25k mark. If this is your first time here, be sure to subscribe so that you don't miss out on future content. And of course, my referral link for my M1 portfolio, if you're interested in starting a portfolio, will be in the description. And of course, you can always follow me on Twitter, because I also do post sometimes throughout the day when I'm seeing certain plays, or if I think that the market is going to be, bouncing at certain points, or if we're looking for a sell-off. Like for example, today I posted that I got out of portion of my CHWY. For those who had been following previously, I had said that I was placing buy orders for CHWY, which is basically like your Amazon company for dogs. And I had put a little bit here at 58, but the majority of my fill was between 53 and 52. And then I posted early in the day that CHWY looked like it was having some resistance, and I took some profits at 57, and I had held the rest for 58. Unfortunately, today we did not, and I got stopped out at 55 because my average down for what I had bought was 54.45, and so my stop was basically at 55, and I took it. So I basically got out of half of my position at 57, which was just about the high of the day, and then the remainder of my position, the other half of my position, I got out at 55, and that was traded in my TD, my TD long-term count. I still have CHWY, of course, in the M1 portfolio, and I'll be looking to, of course, be making some buys. But in talking about the Dow, getting back to the Dow, like I said, that the market is going to be selling off, and you want to be sure that if you're buying, if you're looking for a buying opportunity, you want to know where should I buy. If you're looking at some of your favorite stocks, maybe you like AT&T, maybe you like Verizon, Walmart, etc., the market will definitely be retesting. We're seeing the market hit basically those same strategic points that it hit previously from the previous year. Like I said, 27.5, even way back into 2019, the Dow had a hard time breaking about that 27.5, 27.4 mark. You can see it multiple times, and then subsequently a retest, right? Because whenever a resistance or support is broken, typically the market wants to retest those areas to see if either the buyers or the sellers are still there. In this case right here, the market was retesting to see if the buyers were still there at 27.4, and we can see that they were. The market sold down, but again, you can't look at what the market does during the day. We want to see where the market closes. If you're a long-term trader, or if you're a swing trader, right, you want to see where the market ends, not necessarily what the market does during the day, because there's a lot of fake outs and shakeouts and trying to squeeze people out of positions. And there's of course, there's day trading that is going on. But if you're a swing trader, or if you're a long-term investor, these are the things you're going to be looking for. You don't day trade your swing trades, and you don't day trade your buy and hold stocks. So as we see that the Dow did, of course, retest that area that was a resistance, which subsequently became a support. And then of course we saw the exact same thing here in 2020 of March, where the market again broke through that 27.45 range. And again, we see that the market of course tried to retest that area, and of course it subsequently failed, and then the market came back down. So looking forward, for me, in terms of what I am going to do with my M1 portfolio, I'm waiting for the market to come down to that 25k mark, where I know that we're going to have some resistance. We had some right here, and here, where the market bounced multiple times, and so that's what I'm looking for. We saw a little bit of stagnation here at about, what is that, 26.5, and that's what we saw yesterday, where we kind of bounced off of that. And of course we're retesting that same little area right here, where there was a little bit of support here, but the real support is going to be down here at about the 25k mark. You can see it again right here, where the market subsequently on multiple days here and here and here sold off, and then the subsequent rally to retest to see if there really were sellers still here at that 25k, and of course the market fell. And then we see the same thing over here and here, of course, in multiple days. So this is basically what we'd be looking for. Again, like I said last time, Microsoft right back at that 200 level. If you had been watching on my previous video, I was able to scalp a little bit in my my IRA, but of course I'm still looking to get into Microsoft. On my long-term portfolio. Going to be buying a little more. My next buy position in my IRA is going to be at about 188, maybe 190. In terms of Apple, like I said last time, looking for that 100 on Apple. That's where I'm starting. I've got about, probably going to put in about 500 or so in the IRA. I only have in this particular IRA, I've got about 17,000 in the IRA. So I might put between, for my initial buy, about 500 here at the 100 mark, and then subsequently scale down. I think Apple will maybe perhaps test that 80 mark. We'll have to wait and see how far down the market goes. But in terms of scaling in, this is where I'm beginning to scale in on Apple, just at about that $100 mark. It looks like the market wants to gap fill from here, right? We had a little bit of a gap, and it looks like the market is finally going to be coming down, and we'll probably retest that $100 mark. Same thing with stocks like CHWY. Is another example of a stock that I do like, that I will be buying a bit more here, and I believe, as well as of course T, as a wide range of stocks within my portfolio. Of course, I'll be adding basically to all these different stocks that I do like. They are all dividend paying stocks, except for Foot Locker and as well as Carnival Cruise. Those are the two that currently in this particular portfolio that don't. And I've been looking for buying opportunities in a lot of these stocks, and they've just been overvalued, which is why I've only been putting in like a couple of $100 here and there. But of course, we'll be stepping that up over the next couple of weeks as the market, of course, is coming down. In terms of my risk, I still holding on to Play. Of course, there was a real nice shakeout in Play. If you had been holding Play, you can see that right here, where there was a big shakeout. Play went from 17, came all the way down to about $13, $12, a huge shakeout on some false news that the company was going to be filing for bankruptcy. And then, of course, the stock went from about 12-ish all the way back up to about $18. That is quite the squeeze. I wish I would have been able to get a little bit more. I had only added about $200. I did buy a couple of shares. I bought about 50 shares down here at 12, subsequently sold it at about 17 and change in the IRA, just for a quick little grab. I have a couple of shares left over. I think I've got about 20 shares that I'm just going to hold on to see if we do end up retesting 18. But of course, Play for the long-term portfolio will still be there. I'm just waiting to see if it does come back down to about 12. Looks like we're going to end up holding at about $15. We'll have to wait and see. That's basically going to be it for this video. I didn't want it to be too long. And of course, like I said, feel free to give me a follow. If you have any questions, feel free to leave them in the comment section, of course, and I'll check you out next time. Thanks for watching, and I'll see you.